and the share market has rebounded to record new highs.
So it's risen by 1,000 points in the past 12 months.
It went above 9,000 points for the first time ever.
FOMO, interest rate cuts and an easing of global tensions have sent the share market into record territory.
What we've seen recently is evidence that the boom has turned into the early stages of a bubble.
After the GFC and COVID, fund manager Roger Montgomery says enormous amounts of credit is sloshing through global markets and it's looking for a home.
So the ability to lend money has been going up and people are borrowing because that capacity is there. There's less friction. They're willing to take on risk and markets have been going up and that helps fuel that acceptance of risk. So it's risk on, if you like.
Made easier by central bankers cutting rates, with more to come in the world's biggest economy.
The shifting balance of risks may warrant adjusting our policy stance.
Traders say cash is already rotating out of Wall Street into the Australian share market.
You've seen money coming into the MSCI Asia indices, which includes Australia, and when that money comes in, the money goes into our biggest stocks.
Marcus Padley says stockbrokers offer index funds mirroring the performance of the ASX 200, with the big banks making up roughly a quarter of them.
If you go back to the start of the most recent bull market, November 2023, the bank sector's up 60%, the market's up 28%, and the resources sector is down 3%. So it's all driven by banks.
The stock price of Australia's biggest company, the Commonwealth Bank, is up more than 20% in a year, even though its latest profit result disappointed investors.
Many of those factors aren't so much about the bank's fundamentals improving that much. It's got more to do with the fact that there's been a weight of money coming into it, which has pushed the stock higher.
Analysts reckon the market's irrational behaviour can be best seen in CSL. Its underwhelming financial results, its decision to cut 3,000 jobs and spin off its vaccine division into a separate company saw the share price plunge.
It seems companies have given away the idea of a confession season and now just prepared to dump 6 months of information on one day and not warn the market. That's what's going on with CSL. Otherwise, they're a very sensible, solid company.
The record run of the Australian stock market is perhaps best captured by the performance of superannuation, up as much as 12% over the past 12 months. Now, there are risks out there, but they're not locally based. Analysts say any big fall on the Australian share market is likely to come from a crash on Wall Street.
There's anywhere from an 80 to 90% correlation of our market with the US market. But if there is a market drop, we in the US will inevitably follow suit.
I know in time it will all normalise again. It's just a matter of time. We don't know what will cause it, but it will. And when it does, it will be very painful for those people who have behaved irrationally.
And for the many millions of Australians with superannuation caught in the crossfire.